Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So if you haven't seen or heard this already, check out our new podcast, Ledger Cast, with Ledger Status. Pretty sweet. We've released 2 episodes so far. There's 2 more coming this week. We talked about the GDAX fiasco, which I'm going to refrain from talking about in this video, and we also talked about USD versus BTC trading on alts. Interesting lessons for sure. Let's talk about Brave New Coin articles for a second. So last article I said reversal in near term, and I took my own advice, sold a little bit, bought a little lower. Let's talk about those charts for a little bit. Macro view is this thing which is ever present, and I can't not talk about it every time I get the opportunity to, even though it's kind of voodoo. It's okay, it's for sure voodoo. But essentially every quarter it's either been a top or the bottom for Bitcoin, and bingo bango, as was predicted. So far, this is looking like a top in the interim. Now we'll see where that goes. It's certainly pulling up after a disequilibrium in the market as far as the Bitcoin Cash surprise is concerned. But it was in the cards. As long as you can predict the days on the calendar, you could have predicted this top would have happened within this range more likely than not. So how you want to read that, how you want to trade that as actionable, I don't know, but it was certainly in the back of my mind when I'm making these decisions on what to do and when, knowing we're in the zone, if you will. There's also this, which is the current pitchfork that I've settled on for the trend at the moment. Kind of like so it's a log scale, so it's a parabolic log trend thing. And what it does is shows you the rate of the trend based on the previous rate of the trend. So you're expecting this to be the mean of the trend, the middle of the trend the whole time. And price will oscillate up and down from that. This is the buy zone, this is a sell zone. You can see we bounced off the buy zone twice, 3 times. You know, this was a strong support. So it's likely that we will find resistance on the exact opposite end of that based on the mean. So in this case, it's going to be above 30,000 at this point. Well, maybe a little lower than 30,000 exactly from here, 28,000, something like that. That'll be something to watch for going forward. Again, I don't know how much we're going to see of that before next quarter. Considering this chart, I'm optimistic, but I'm realistic too, you know. So this is just too compelling to ignore at this point. It's been, this is since 2015, so it's almost been 3 years running on this. So yeah, I'm expecting, I still like 33K at least. We haven't seen a blow off top. The trend is your friend. This should keep going. There's no concern for Bitcoin Cash or anything in my mind. All this was retesting the mean, which is what it did. It also did a few other things. So this is a rising wedge I posted in the article. And again, if you're not reading these articles, that's fine. If you think they're crap, that's fine. But if you're struggling with TA, don't know what to do, at the very least you can expose yourself to things like this so that you can say, I can be semi-prepared for events that seem, you know, out of left field, which is what the Bitcoin Cash announcement on GDAX was, and just the whole media circus around that. Despite all of that, there was this before that, you know, there was this before that. So there are things that technically certainly showed weakness already. Again, that's why I wasn't concerned at all for the events, because I didn't predict the event, but I was able to predict the downtrend, or the down candles, if you will, ahead of time because of things like this. This is a rising wedge. What happens here is price goes higher and higher on less volume, on less momentum. These are known as divergences. And the targets for this are always 50% pullback. Now we've seen these several times on the way up. They've broken up several times. That's why I'm posting this as the resistance zone. We didn't even get to 20K in this case, but as soon as it breaks the diag here, that's your first signal. And then you can see it on the volume confirmation, and it just keeps falling out of this rising wedge with no momentum per se, and then it just finally trickles down, and then it explodes a little bit. And where did it hit exactly? A couple times. It hit the 50% fib. This is on the index. It didn't do that on GDAX. GDAX was GDAX and did things that only GDAX could do, and had some order book issues, some thin liquidity at the time. So again, this is all in the cards. It's might seem like crazy FUD. Bitcoin's gonna die. Bitcoin died. Transaction fees, blah blah blah. Technically, I'm okay because it was already here. I was able to see that, and you should be able to see that too. Like, this wasn't a major surprise that this happened. So this is the next target at this point. I see a lot of people making chart patterns that don't work out, and then they just kind of ignore the rest of it. Like, they're like, oh, that idea's dead. For me, if the chart pattern doesn't work out, in the back of my mind, it's always there, because that's where we're probably going to go should it, retest heavily on something and then reverse. So in this case, again, 23.5, I don't know when that's going to happen. I love that question. I give people like the roadmap, the entry, the exit, and they ask me when. It's like, I don't know, man. Just trade the chart. Like, Ethereum's a perfect example of that. That ascending triangle took a long time to play out. It didn't pull back this far, but don't ask me when. If it's active, it's active. If it's not active, it's not active. It's going to happen or not. So don't worry about it. Just trade the pattern and hold it. I don't know what else to say. Use stops, use trailing stops. So let's look at lower time frames. This is hourly, and I'm seeing this. I see this. So this I'm calling rejection, wick rejection. So when I refer to wick rejection, this is what I mean. When we start to see this on the opposite side, that's when you think, this is probably the top. When we're seeing it like this, I'm thinking, this is probably the bottom. We tested this zone 1, 2, 3, 4, 5, 6, 7, 8, 9 times, and it held. I have to be pretty optimistic at this point that this is going to pull up somewhere. I don't know if it's going to go to 23.5 today, but you have to be optimistic that this zone is heavy support. Even if we retest this, I don't see it breaking. But if it does break, you need to be prepared for that. So this is low probability at this point, but if it does break, I'd expect it to go. So this is a 5200 on the 4 hour. I'd expect it to go down here to 14 something on the 4 hour 200 EMA. You can see the last time we were at the 200 EMA was November 13th, something like that. So we're kind of due for a touch, if you will. We hit it September 13th, November 13th, December 13th came and went. We did nothing. So maybe a Christmas dump. I don't know. That's not too probable for me at this point. That's something to look at. And then if we go even further down on the hourly, you can see we got this bearish cross on the EMAs. So classical EMA strategy is you long the cross and then you close the cross and you add on the bounces of support. So you could have added here. And when it breaks definitively, that's another close signal. Just a super simple strategy. You can use on higher time frames, especially when things are trending. This keeps you in the trade a long time, and it helps you to avoid emotions when you're just looking at the EMA that's following price. And again, back to this 14 target. So the cloud did this much of the same thing that the hourly EMA did. It got you in way below 7K, and it's calling for an exit at 17 or above 17 at this case. That's 10 grand. It's like 80%. I don't even know what it is above that. Even 110%. I don't know what it is, but the bearish TK cross is calling for an exit there. So this excites me because even though I'm back in on every way possible on spot, I'm seeing the bearish cross, and that says to look for the bullish cross or look for the edge-to-edge trade. The edge-to-edge trade would bring us down to 14, like I keep saying, but the bullish recross above the cloud is the most bullish signal we can get. So when you see that, you just want to sell your kids, sell their organs, sell your house, remortgage your parents' house, whatever you got to do, because that's a great signal to re-long if you're not already long from some support. You can see we hit the 4 hour Kijun and we kind of busted below that at this point because things have pulled up. It wasn't one of these situations where we got a clean bounce and then immediately we keep going. So far anyway, we'll see regarding this cross. But if we don't, bust up again, this is very likely that we test all these EMAs. And the first step's going to be breaking in the cloud, closing a candle in the cloud. The second step's going to be breaking this order block support. And then it's just going to retest these previous levels, retest the EMA. Then lastly, if we go to daily cloud, we can see there's a massive support at 12.6. I don't think we'll get that far, but if we get a head and shoulders situation, that's something to look for. This is also the 50 EMA, which we haven't hit since November 13th-ish as well. So we're kind of due a couple months, well, more than a month. So we're kind of due. It's not out of the cards at this point. I know it's like $4,000 drop, but that's where support is. I wouldn't be surprised if we go down that far. Near term looks good. Ready for more. Pitchfork looks good. I'm in. Let's go. Let me know what you guys think. Like, comment, share, subscribe. Hit me up on Twitter, Telegram, and happy trading.